The term funding winter refers to a period in which funding for startups becomes more difficult to obtain due to a variety of factors including economic conditions, market trends, and investor sentiment. Hello and welcome to VAR India News Hour. Funding winter has brought a significant impact on the growth and development of startups, particularly those in emerging markets like India. We are witnessing employee layoffs, investors delaying capital infusion decisions, lower spends by startups in marketing, some startups getting valued lower than their previous funding rounds, etc., resulting in drying up of capital flows or funding winter. This has been a global phenomenon throughout 2022 and is expected to have an extended run in 2023 as well. Prior to funding winter, globally, many startups were able to raise funds at increasingly higher valuations with relative ease. India being the third largest startup ecosystem in the world, these trends are reflected in the capital flows to Indian startups as well. A recent PwC report mentions a drop of 33% funding of Indian startups during 2022 in comparison to 2021. Venture capitalists and PE investors are not rushing into new deals. Many prefer to invest in their existing portfolio where the business has progressed as per projected milestones. Most investors look for a clear path to profitability while investing. Despite these challenges, however, Indian startups have continued to innovate and adapt, finding new ways to secure funding and grow their businesses. According to data compiled by private market intelligence platform Traction Technologies, the number of unicorns in India nearly halved from 44 in 2021 to 23 in 2022. Globally, there is a 55% drop in the number of startups attaining valuation of $1 billion or more. Secondly, we have witnessed funding winter has made India a lucrative market for cloud migration startups focused on profitability over growth. The relevance of cloud migration seems to be going beyond scalability and agility in recent times. As the funding winter has set in and is expected to continue for the next couple of years, projecting positive unit economies is imperative for startups to attract more rounds of funding. With the Indian startup ecosystem shifting its focus towards profitability, cloud migration startups are seeing a significant spike in demand. As investors now prioritize positive unit economics, startups are turning to cloud migration to reduce cash burn and improve their profitability projections. This has created a lucrative market for cloud migration service providers from global markets who are witnessing growth despite the funding winter. Additionally, cloud wars between the major cloud giants have resulted in slashed pricing, making cloud migration an even more attractive proposition for Indian startups. Cloud migration has now become a survival imperative for Indian startups, leading to a surge in demand for cloud migration services. Funding winter will continue till global factors contributing to enhanced risk perception remain dominant. In the meantime, startups need to devise coping mechanisms to survive and exploit the market conditions. Let's look into today's headlines. TimCook to launch Apple's first store in India today. Apple's chief executive Tim Cook will welcome customers to the iPhone maker's first store in India, which is scheduled to open at the BKC Business District in Mumbai today. The store is being launched as the company marks 25 years in the country. On the eve of opening for customers, a media preview was held at the store. Malware Goldoson infects 60 mobile apps on Google Play. A new Android malware dubbed Goldoson has sneaked its way into the Google Play Store, infecting 60 legitimate apps with a staggering 100 million downloads collectively. The malicious Goldoson component is part of a third-party library used by all 60 apps which developers unknowingly added to their applications. The malware can gather data on installed apps, Wi-Fi and Bluetooth-connected devices and the user's GPS locations. Google withdraws Supreme Court's appeal against NCLAT order. Tech giant Google has withdrawn its Supreme Court appeal against the National Company Law Appellate Tribunal's order refusing a stay on the Competition Commission of India's Rs 936 crores penalty for its alleged abuse of dominant position with regards to its PlayStation policies. Google has done so as it is pursuing its appeal against CCI's order in NCLAT. Jio and Bharti Airtel to provide new connections to 1.1 million employees of Indian Railways. Reliance Jio and Bharti Airtel will provide new mobile connections to 1.1 million employees of Indian Railways across the country. According to official documents, Jio will provide 728,000 SIM cards for a contract value of Rs 126 crores, while Airtel will supply 485,000 SIM cards for Rs 84 crores. The two telcos emerged as lowest bidders in the National Transporters Expansion of the Closed User Group, that is CUG scheme. Coca-Cola to buy minority stake in online food ordering startup Thrive. Coca-Cola is reportedly making its first investment in an Indian startup by buying a minority stake in food ordering platform Thrive. The startup has direct competition with companies like Swiggy and Zomato. Thrive is a search and delivery platform that has partnerships with over 5,500 restaurants. The strategic investment will give a direct edge to Coca-Cola over its rivals. That's all for now. Please like, share, comment and subscribe to VARINDIA News Magazine. You can download the VARINDIA app from Google Play Store and Apple App Store for the latest news and updates. Stay tuned. Thank you.